I won't stop till I hear him say,
Alrighty, what is going on? CYPRX Advanced YouTubers, welcome back to another CYPRX video breakdown. In today's video breakdown, we're going to be going over a XRP trade that I sent to the CYPRX students in our private group chat and hosted a private Zoom call in the live markets for our private students, giving them a XRP intraday trade analysis before it played out. Currently, we are sitting in profit. I'll be breaking down what it was that I was seeing in the market, why it was that I was taking and placing this trade. If you all enjoy video breakdowns like this, make sure that you smash that thumbs up button, subscribe to the channel. We do appreciate the love and the support. Don't forget that between now and up until Friday, we have a Valentine's Day discount code going for the CYPRX course mentorship program. With that being said, make sure that as you all are watching these video breakdowns, you are taking notes, especially when it comes to learning how to properly trade via technical analysis. Now, technical analysis is not going to be the only thing that brings you success in this market. However, it does play an important role. So take that into consideration as you're going through this video breakdown. So you guys can see here on Twitter, I posted a live video. We had 5 market participants from the CYPRX Zoom call this morning, mainly because a lot of our students are overseas, international students. 5 students on the Zoom call this morning calling out a live trade breakdown. You guys can see that our entry was at the psychological level, 36.7. Our stop loss was at 35. And you guys can see that I sent that to the CYPRX students at 5:52 a.m. So if we're looking at the charts, you guys can see right down here at the bottom is 5:52 a.m. Pacific Standard Time, California. So the students had plenty of time to react to the analysis that I sent them. So let's go into details, starting on the 10-minute chart, because I used the 10-minute chart to scalp the markets this morning, and then we'll jump all the way down to the 5-minute and the 1-minute chart, explaining to you all in detail what it was that I was seeing and how we mark up the charts here at CYPRX prior to New York session to capitalize on these market moves. So prior to the New York session, I want to point out a couple of things. Number one, some things that we pay attention to here at CYPRX is where previous banking institutions either bought or sold from. Well, prior to this day's worth of price action that I have highlighted via this aqua box here, again, because we know that the New York Asia session rollover creates a new daily candlestick. So roughly starting at about 2 p.m. Pacific Standard Time, 5 p.m. Eastern Standard Time, that is when the new daily candlestick starts and the market in the form of stocks and forex actually rolls over. Now, we know that the crypto markets don't ever close. However, this is exactly the same time that a new daily candlestick starts as well, or a new day's worth of price action. New retail traders flood into the market with open positions. So keep that in mind as we're moving through price action, thinking about retail trading setups, and remembering some things that we teach here on the CYPRX channel is that banking institutions or these larger funds, what they like to do is they like to target retail money, liquidity in the market that exists in the form of retail traders that trade these double top patterns, these trend line patterns, all of these indicator-based strategies, okay? All that money that exists in the market above highs and lows is what the banking institutional traders are attacking. Okay, regardless if you call them banking institutions, it's just a habit for me to say that. Smart money, right? People with more money than you and I that know that orders exist in the market above these retail areas. So that's what we're going to be focusing and paying attention to. That is one of the main ways that we caught this trade today. So before that, we see that New York session prior to the current New York session that we're operating in, the 13th of February, obviously today is the 14th of February, we can see that New York session was bullish. We can see that they were selling in the beginning of their session down into discounts into where London session bought from. You guys can see this is a London session on February 13th where they bought from roughly around 36 cents, let's just say. And you can see that New York session was not going to buy from a high. So what did they do? They dropped price down into a discount from where London session bought from, and they bought price up before rolling price action over into the new day's worth of price action where Asia session took over. So with that being said, giving you guys some of the gems that we teach here in the form of technical analysis, we like to identify advanced tracking methodologies where if the think about this concept. If the previous New York session was bullish and we have market structure where the market created a low, where it failed to break a previous market structure low and instead created a new market structure high, Highlighting from the candlestick bodies down to the wick and extending that over, we can assume that as long as the market price is above this New York session low and not creating lower lows and lower highs beneath it, then we are respecting what? Bullish order flow, or we are going to continuously see the market makers attempt to attack lows to reverse price action and come and attack the liquidity above highs. So what do I mean by that? You guys can clearly see right here that pattern that I just said. We are attacking lows. You guys can see where New York session bought from. They attacked lows right here. Prior to their session, we have pre-engineered liquidity in the manipulation window. We have another pre-engineered low in the market. The market makers attack that low to get a discount where London session bought from, and they buy price up. So that's why we were highlighting this area, because we were bullish above this area, considering the fact that we created a new market structure high and we have failed to print bearish price action beneath this low. Coming into the new day's worth of price action. Interestingly enough, I teach you guys here on the CYPRX YouTube channel about what's called a manipulation window. Now, I can't give you guys those exact times. That's something that we display to our CYPRX students. But generally speaking, the manipulation window takes place roughly around the beginning of every single session, whether that's Asia, London, or New York. Okay. Well, interestingly enough, in the beginning of Asia's session, during their manipulation window, right above these two highs, what do we see? We see a retail resistance pattern, or a double top formation, or where we can assume that retail traders would have open sell positions or short positions above highs with their stop loss placed tightly above, looking to sell this price action. Okay. So here at CYPRX, we were able to analyze that and say to ourselves, well, thinking about it, if price action is bullish, being determined by this market low, respecting where London session bought from, and breaking a previous market structure high, we can see that starting this new day's worth of price action, the institutional traders were setting up a retail trap, where they were setting up liquidity above highs in order to manipulate retail traders to think that the market was going to sell off from some type of imaginary resistance level, and then that they were going to buy from a discount as long as price held above this previous New York session low. Now, something else interesting that we teach here on the CYPRX YouTube channel is to pay attention to retail trendline liquidity, right? So I want you all to think about it. Right before the New York session opened, considering the fact that we had CPI come out at 5:30 a.m. on the dot this morning, look what happens right before New York session plays out. What do you guys see? I want you to take it upon yourself and pause the screen real fast and say, if you've seen any of our previous video breakdowns, what do you see right now building up underneath of lows prior to the New York session? I'll give you guys a little bit of a hint. We see trendline liquidity, right? If you said that to yourself, then pat yourself on the back. You've been paying attention to some of the things that we've been teaching to trade against here at the CYPRX YouTube channel. Now, not only do we have the CPI news coming out at 5:30, which if you look at the charts right down here, you guys can see at the bottom of my charts, it's 5:30. Look what the bank and institutional traders do. We see another area of resistance here, or a triple top formation, where we can imagine, again, above highs. Interestingly enough, these highs do take place during the manipulation windows to the London session and the New York session. And the bottoms of these trend lines right here, the lows, come in also at the manipulation windows. Interesting how it all plays out, right? Look what the market makers do. Remember this area of liquidity that was set up, this trap that was set up prior to the Asia session right above these highs. We've already shown you on the 10-minute chart why we are bullish above these lows, because the bank and institutions respected the London session buy areas. New York sessional traders bought up price, breaking previous market structure. So right now, as of this New York session, we are operating inside of this A to B move, right? Where we broke all of this previous market structure. Right now, this market and current price action information is telling us that we are bullish because we are respecting bullish order flow, which is failure to make new swing lows in the market and instead making higher highs, right? So if you guys are following along so far, check this out. Right when the CPI comes out, you guys can see 5:30. What happens? A sharp sell-off. Now, think about retail money and think about how they learn about candlestick formations. They are taught when a bearish candlestick is formed, that most likely price action is going to flip and reverse bearish, but they're not thinking about structure. Remember, we have already identified that there's a triple touch 1, 2, and 3 areas of a trend line where retail money is being set up in the form of a trap by institutional traders who know that retail traders' stop losses exist beneath these lows. Think about this. Let me play this for you guys one more time, okay? look at how this price action right here on this candlestick plays out. If this was a valid bearish candlestick, okay, don't you think for a second, just think about this logically, that it would have broken the previous low? Remember, we're not printing bearish price action, which is lower lows and lower highs. Instead, the market makers are grabbing liquidity from lows, respecting discounted areas from where they bought from before, and bulls are taking control of the market, which is exactly when I sent this analysis to the CYPRX students right after the CPI came out for the United States dollar. You guys can see a sharp uptick of buyers' interest right after all of this liquidity beneath lows is taken out. So real fast, I'm going to count to 3. I'm going to play this price action out for you guys. Watch how this candlestick prints, fails to break a previous market structure low, and instead is literally telling you all that they are coming to attack retail money. And after leaving a trap above highs, this gives us such a higher probability that the market is going to reverse to come and attack the liquidity that they left behind in the form of retail resistance sellers. 1, 2, 3. Boom. You guys see that, right? If this was a valid bearish engulfing candlestick, it would have, number one, closed beneath one of these lows, which it did not, or closed beneath a previous market structure low, which it also did not do. So we still have to assume that we are respecting bullish order flow. I sent my analysis to the CYPRX students. I entered into the market at 36,700 psychological level to the T, with my stop loss at 35 cents, saying to the CYPRX students, risking 1% of my portfolio, looking for a 1 to 2 risk to reward ratio on my leveraged account. This is a high risk trade. Here's my entry. Here's my stop loss. Here's my take profit. Then I hopped on a Zoom call and managed the trade with them. So now let's jump down to the 1-minute chart. And I want to show you guys how the market makers, again, were manipulating price during the CPI announcement and then coming back to attack all of the money underneath of retail lows and right above retail highs. You guys can see, remember those highs over here to the left-hand side that we had identified prior to the Asia session. Look how the market makers, again, come straight up, magnetize themselves right into this area of liquidity. Actually, let's jump to the 5 minutes, a lot more clear. So here it goes. Price action fails to create a new market structure low. We manipulate sellers again. What's interesting about this pattern right here that you guys see in comparison to the Asia session highs that we've already identified? More retail resistance. Again, retail resistance traders are piling up orders thinking that the market's going to sell off because of some double top formation right here, and they're selling with their stop loss above these highs. Here at CYPRX, we're trading against the retail herd, and we've already shown you and identified to you all how the market makers are printing bullish order flow by breaking previous market structure highs, creating new A to B moves in the market, respecting previous buy areas where previous banking institutions bought from during London session, and generating retail traps beneath lows to give the market momentum after grabbing those orders out of the market to come and move higher to take more retail money out of the market from other retail resistance traders who are selling above the Asia session highs. So with that being said, I'll play the rest of this price action out for you guys. Again, this was a live trade call out sent to the CYPRX students. I even hopped on a Zoom call with them this morning to manage the trade. Sent you guys the analysis on Twitter. We're still floating in profit. My stops currently now are at break even. With that being said, I will monitor this trade throughout the rest of the New York session. I have not taken profit from this trade, mainly because my initial take profit area was 40 cents. We have yet to come into fruition with that psychological level. So if my trade gets stopped out at break even, so be it. I've already taken that into consideration as a potential possibility. If you all are interested in our technical analysis that we send to the students well in advance in our private group chat, the link for our mentorship program is in the description down below. If you want a further in-depth perspective on how it is that we approach the markets via our technical and psychological analysis here at CYPRX. Blessings to you guys. Don't forget that we have a Valentine's Day discount code running up until Friday of this week. As always, be cognizant, be aware, do your own personal research, and I will see you all in the next video breakdown.
I won't stop till I hear him say